Welcome to the weekly market recap with Sampath Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Sri Lanka is set to receive a further boost for trade, investment and industrial development, with the Asian Development Bank committing a total of $200 million in financing. The funding is expected to provide budgetary support while helping strengthen policies aimed at expanding trade and investment. The additional financing also comes as Sri Lanka faces great economic uncertainty from external shocks. The Sri Lankan government has secured $200 million in financing from the Asian Development Bank or ADB to support Sri Lanka's trade, investment and industrial development. The loan agreement was signed on 18 August at the Treasury between representatives of the ADB and the Ministry of Finance, Planning and Economic Development. The financing is being provided under the ADB's policy-based lending facility. It will support the Trade, Investment and Industry Development Program, Sub-Program 1. The program was initially approved with financing of $100 million. However, amid increased economic uncertainty linked to the ongoing Middle East crisis and climate-related shocks, the ADB agreed to provide a further $100 million in supplementary financing. This brings the total financing for Sub-Program 1 to $200 million. According to the Ministry of Finance, the program is aligned with Sri Lanka's National Policy Framework 2025, which focuses on building a resilient, inclusive and sustainable economy. Trade and investment have also been identified as key government priorities under the Major Public Investment Projects 2026 to 2028. The overall Trade, Investment and Industry Development Program consists of two sub-programs. Sub-Program 1 will receive $200 million, while Sub-Program 2 has indicated financing of $100 million and is expected to be implemented in 2028. According to the Ministry of Finance, the policy-based loan will provide timely general budgetary support to the government. At the same time, it is expected to strengthen policies aimed at improving trade, investment and industrial development. The Ministry of Finance, Planning and Economic Development will serve as the executing agency for the program. For Sri Lanka, the financing is significant as it combines immediate budgetary support with policy measures aimed at strengthening trade, investment and industrial development, particularly in heightened external economic uncertainty. Sri Lanka's private sector activity gained further momentum in July, with both manufacturing and services recording stronger growth. The improvement points to broader business activity and stronger demand across several key sectors, although supply chain pressures and global uncertainties remain a concern. Sri Lanka's manufacturing and services sector recorded stronger growth in July, according to the latest Purchasing Managers Index released by the Central Bank of Sri Lanka. The manufacturing PMI rose to 55 in July, compared with 53 in June 2026. This indicates that manufacturing activity expanded at a faster rate during the month. The improvement was broad-based, with all sub-indices contributing positively. New orders increased to 55.9 in July from 50 in June. Production also expanded to 54.5 compared with 52 in June 2026. According to the CBSL, this improvement was mainly driven by strong performance in the food and beverage manufacturing sector. Meanwhile, employment and stock of purchases continue to remain in expansion territory in July, reflecting positive expectations for manufacturing activity. However, supplies' delivery time remained lengthened during the month. This indicates that supply chain pressures continue to affect the manufacturing sector. Looking ahead, the CBSL said the outlook for manufacturing activity over the next 3 months remain optimistic, although businesses continue to exercise caution amid global uncertainties. Turning to the services sector, the services PMI increased to 61.4 in July from 58.5 in June 2026. This indicates a strong expansion in services activity. Business activity expanded across a broad range of services sector. Transportation, financial and professional services were the main drivers of growth, while other personal services sector also recorded notable expansion. New businesses also increased in July 2026, mainly supported by transportation and professional services. Financial services and other personal services also contributed to this growth. Employment increased during the month, supported by new recruitment and a slowdown in staff resignations. However, backlogs of work also increased compared with June 2026. The outlook for business activity also strengthened further for the upcoming quarter. According to the CBSL, this was supported by expectations of improving economic conditions and strong tourist arrivals linked to the Kandy Esala Perahara. However, global economic uncertainties continue to pose downside risks. Overall, the July PMI figures point to stronger momentum across both manufacturing and services. The continued expansion is a positive signal for domestic business activity, while supply chain constraints and global risks remain key factors to watch in the months ahead. Colombo's land market continued to move higher in the first half of 2026, but the pace of appreciation has eased considerably. The latest data shows that land values remain well above their post-crisis levels, with residential property continuing to lead the gains. Land values in the Colombo district continued to increase in the first half of 2026, although the pace of growth moderated significantly compared with the stronger gains recorded during and after the economic crisis. According to the latest data from the Central Bank of Sri Lanka, the land valuation indicator increased by 5.9% year-on-year in the first half of 2026. The LVI rose to 271.6 from 256.4 a year earlier. All three land categories recorded moderate year-on-year increases. Residential land recorded the strongest growth, rising by 6.7%. Commercial land values increased by 5.7%, while industrial land values rose by 5.2%. Despite the slower pace of growth, land values remain significantly above their end 2023 levels. The headline LVI is now nearly 24% above its end 2023 level of 219.8. Residential land values have increased by nearly 29% over the same period, rising from an index value of 221.0 to 284.9. Commercial land values have increased by nearly 26% from 214.0 to 268.9. Industrial land values have risen by about 16% from 224.5 to 261. This means residential land has recorded the strongest increase since the end of 2023, followed by commercial land. Industrial land has recorded a comparatively smaller increase. However, the current pace of growth is well below the levels seen around the height of the economic crisis. The headline LVI increased by 14.8% year-on-year in the second half of 2022 and by 15.2% in the first half of 2023. Growth then slowed to 7.1% in the second half of 2023. The moderation is also visible in 6-month movements. The LVI increased by 9.8% in the second half of 2022 and by a further 4.9% in the first half of 2023. In comparison, the LVI increased by 3.7% in the first half of 2026 from the preceding 6-month period. The latest figures also show a slowdown from the renewed double-digit growth recorded during 2025. The headline LVI increased by 11.4% year-on-year in the first half of 2025 and by 10.6% in the second half of 2025, before moderating to 5.9% in the first half of 2026. Residential land followed a similar trend. Its year-on-year growth is to 6.7% in the first half of 2026 from 12.4% in the second half of 2025 and 14.4% in the first half of 2025. However, on a 6-month basis, all three categories continue to record increases in the first half of 2026. Residential land values increased by 4.3% from the second half of 2025. Industrial land values rose by 3.6%, while commercial land values increased by 3.2%. Residential and industrial land also recorded stronger 6-month increases than in the second half of 2025, when they rose by 2.3% and 1.6% respectively. The land valuation indicator is compiled twice a year using per perch bare land prices obtained from the Government Valuation Department. It covers all 13 divisional secretariat divisions in the Colombo district. The headline LVI is calculated as a simple average of separate residential, commercial and industrial land valuation indicators. Overall, the latest figures indicate that Colombo land values continue to rise, but the pace of appreciation has normalized significantly from the sharp increases seen during the economic crisis and the stronger growth recorded in 2025. Global oil prices remain a key risk for Sri Lanka's inflation outlook, with the central bank closely watching developments in international energy markets. The latest assessment suggests that inflation could continue to moving towards the 5% target provided oil prices remain contained. However, any unexpected surge in energy prices could create fresh pressure on the economy. Sri Lanka is expected to manage its inflationary pressures if global oil prices remain at around $80 a barrel through the end of 2026. Speaking in an interview in Sydney, Australia, Governor Veerasimha said Sri Lanka would be able to manage the situation if oil prices remain around $80 a barrel throughout the end of the year. However, he cautioned that any unexpected developments in global oil prices could create challenges for the country. Higher global energy prices have contributed to inflationary pressures in Sri Lanka and have also placed pressure on the local currency. Meanwhile, the governor expects inflation to slow towards the central bank's 5% target during the second half of this year and into next year. He attributed the improving inflation outlook partly to monetary policy measures introduced by the central bank in May, together with government measures aimed at curbing imports. As part of its response to rising global energy prices and stronger credit demand, the central bank raised its benchmark rate by 1 percentage point in May. The CBSL then kept its overnight policy rate unchanged in July as policymakers sought to balance price stability with economic growth. Despite continued global uncertainty, Governor Veerasimha does not expect tighter monetary conditions and higher prices to have a significant adverse impact on Sri Lanka's economic growth. He expects economic growth to moderate to around 4% to 5% during the second half of 2026. Sri Lanka is continuing its recovery from the economic crisis that culminated in the country's sovereign default in 2022 and its entry into an IMF-supported program. Looking ahead, Governor Veerasimha said Sri Lanka is expected to fully complete its 4-year IMF program in the second half of 2027. The next review of the program is expected around November or December 2026. Overall, the inflation outlook remains closely linked to global energy prices. Stable oil prices could support the continued easing of inflation, while any unexpected increase in energy costs could create additional pressure on prices and the broader economy. Sri Lanka is looking to reshape the way it finances government spending and development over the next 4 years. The government plans to reduce its reliance on foreign borrowing and place greater emphasis on domestic funding. The shift is aimed at strengthening debt sustainability and reducing the risk of future debt pressures. The Sri Lankan government plans to reduce its reliance on foreign borrowing and meet most of its development financing needs through domestic sources by 2030. Speaking in Parliament, Deputy Finance Minister said the government's future financial management plans would focus on securing loans at lower interest rates and directing borrowing towards specific projects. He said the strategy would also focus on bringing technology into Sri Lanka to the greatest extent possible, while sourcing the necessary funds domestically rather than relying on foreign loans except where they are considered essential. According to the Ministry of Finance, Sri Lanka's medium-term debt management strategy aims to meet around 85% to 90% of its annual gross borrowing needs through domestic financing by 2030. This would mainly be through local instruments such as Treasury bonds and Treasury-bills. At the same time, the strategy seeks to limit foreign commercial borrowing in order to maintain debt sustainability. The government says fiscal consolidation remains a key part of this approach. According to Deputy Finance Minister, interest payments previously accounted for between 60% and 70% of every 100 rupees in government revenue. That figure has now been reduced to 49%, which he said reflects progress towards achieving debt sustainability. Looking ahead, the government's Sustainable Financial Management Framework is intended to guide future borrowing decisions. The focus will be on strategically planning borrowing while protecting debt sustainability and supporting the country's economic development. Overall, the proposed shift towards domestic financing represents a significant change in Sri Lanka's approach to public borrowing. Reducing dependence on foreign borrowing could help limit exposure to external financing risks, while stronger fiscal discipline and targeted borrowing are expected to remain important for maintaining debt sustainability through 2030. Sri Lanka's tourism recovery continues to gather momentum, with arrivals remaining strong through the first half of August. The latest figures take total tourist arrivals for 2026 closer to the 1.5 million mark, reinforcing tourism's importance as a key source of foreign exchange and economic activity. Sri Lanka recorded more than 113,000 tourist arrivals during the first 16 days of August, taking total arrivals for 2026 to over 1.45 million. According to the latest figures from the Sri Lanka Tourism Development Authority, the country welcomed 113,307 tourists between 1st and 16th August. This brought total tourist arrivals between 1st January and 16th August 2026 to 1,456,725. India remained the leading source market during the first 16 days of August. A total of 25,355 Indian tourists arrived in Sri Lanka during this period, accounting for around 22% of total arrivals. The United Kingdom was the second largest source market with 12,738 arrivals. France followed with 8,106 tourist arrivals. Meanwhile, India also continued to lead Sri Lanka's overall tourist arrivals for the year. The country has contributed 363,585 tourist arrivals between 1st January and 16th August. The United Kingdom accounted for 143,139 arrivals during the same period. The latest figures highlight the continued importance of tourism to Sri Lanka's economic recovery. Strong tourist arrivals support foreign exchange earnings, and activity rose a wide range of sectors, including hotels, transport, restaurants, and other tourism-related businesses. With total arrivals already exceeding 1.45 million by 16th August, the pace of arrivals through the remainder of the year will remain important for the tourism sector and the broader economy. Let's take a look at this week's Treasury-bill auction results. With the recent Treasury-bill auction, the 91-day T-bill rate stands at 9.22%, down by 22 basis points. The 182-day T-bill rate stands at 9.60%, down by 18 basis points, and the 1-year T-bill rate stands at 9.91%, down by 10 basis points compared to the previous week. Thank you for watching. We'll be back next week.